All right. Let's see if we can get through this in, well, without straying off topic. Now, the reason I wanted to do this video is that I had a conversation with a client recently. And client, if you're watching, I'm not going to call any names, but of course, I was speaking with this client about their portfolio, and we met at a recent event. Well, actually, I can shout out the event, right? So for those of you who know about Kalila Reynolds, should have had her first, is it Money Talks? Yes, I want to say Money Talks. So she had that event, and of course, we're in the same industry, for lack of a better um, description. And so I was, talking to one of our community members, and she had watched the video that I did on owning too many stocks. If you're not familiar with it, I'll link it at some point later during in the description of this video. And of course, she's telling me about her portfolio. We're talking about the market and all of that stuff. And then she's talking about, after she watched that video, she was, very interested in just looking at her portfolio, assessing what she should do. And she's going through and saying which stocks she thought would make sense to rebalance out of. And then she stopped on one stock, right? And then she's like, I can't sell this stock for sentimental reasons. It was my first stock. And so it's very common that I hear that, right? Because I work with clients to do one-on-one consultations, to the coaching. And of course, there's our monthly challenge that we do. So I talk to people about their investing style and strategy, their portfolio from time to time, just to understand, their thought process in investing. And so I'm talking with this person and I'm smiling because she's saying that she's not willing to sell a particular stock. And she didn't come out right away and said it was for sentimental reasons, but I asked her because, she's like, I can't sell this stock. And I won't say the name of the company. But I'm like, why? She's like, well, I said, was it the first stock you ever bought? And she said, yes. And so, I'm like, I have to do this video to talk about this because she's not the first person, and I'm sure she's not going to be the last. So I wanted to talk about this because this is an issue that I see in terms of investors, right? So, and the truth is I went through the same thing, right? So I remember told this story here many times before. You guys know this story very well. My first stock was actually, well, my first local stock, because I started investing in the US markets before I started in Jamaica. But my first local stock was VMIL, because I purchased that IPO and it did well for a while. And then it got to a point where I just found myself where I couldn't sell it, right? This was back in 2017, December, I think that was the IPO. And there are many times where, I looked at it, wanted to sell it, and I'm like, I just can't sell it. It's my first stock, right? So I certainly could relate to what she was saying, but then I also know, because I could relate, that was the thing that was holding her back from truly building her portfolio based on what her current needs are, what her current situation is, and what her goals are for the future at that point, right? And so it didn't appear to me that she was making the decision solely out of, what would have fit her strategy or what her goals were in terms of a portfolio. But it was simply that she was holding on to it for, again, sentimental reasons, right? So I'll share just, this is going to be very, very direct, right? So there are about 3 reasons I can think of that for me, I would hold a stock in perpetuity for, and I'll share the reasons, and then I'll kind of take your questions. Do what we normally do, right? But let me ask you before I continue. We're about 5 minutes in. Do you have any stock like that in your portfolio? And if you do, what is the stock, right? What's the stock that you feel like, at least right now, that you would not sell, right? What's that stock? Tell me. I'd be interested to see what it is, right? So I say Limitless, saying TJH. I don't know if that's for me. If you think that's what I would say, but that's not what this video is about really. I'm not gonna call out any particular stock, but I do want to know if you do have a stock like that, because persons sometimes are like that, where something is there in their portfolio for sentimental reasons and other reasons. I won't get into the reasons that I've heard. Maybe one day I'll do a video about that. But at the very least, I thought I'd share just 3 things, and there are more, but there are 3 things that I can think of. So I see Christopher saying no, I don't. So Chris is saying he doesn't have a stock that he would hold on to forever. Humble Boss saying Trans Jamaica. Christopher saying everything is for sale at the right price. So I'll actually piggyback on that point, because one of the things that I say, and I say this often, right? We're all investing for something, for some purpose, for some end goal. We do expect that at some point either the investment is going to be worth so much, but all of that is going to be unrealized until you sell. So we're all purchasing expecting that one day we're going to have to sell. See, you kind of see where I'm going with this already, where if you can't picture yourself selling, you really should ask yourself, what condition would you sell in and why? Because on one side, there's nothing wrong with holding out on something that you are expecting to happen at a future date, but you can't just be holding and don't know why. I think that's when it gets a little dangerous. If you have stocks that you can't just say, you like the stock and you can't tell me why. You like it, why? That's the first question I'm going to ask you, because if I say that I like something, I'm very certainly going to tell you why, right? So let me get into the 3 reasons. What I see most of you saying, Trans Jamaica, TJH is your first stock. Is it, Garfield, that you started with the offer for sale, or you purchased back when it was IPO? Let me know. Worrell said, I have one, but now I've learned to remove my emotions from investing, so now I no longer have a stock that I keep for sentimental reasons. Again, this is an interesting point that I could say a lot on. So I don't believe that we can do emotion-free investing, right? I don't think that's entirely possible, because we're human. Emotions drive a lot of what we do. But what we want to be able to do is keep our emotions under control. And when I say that, there is a certain part of investing that is pure instinct, right? You can do all the research, do all the analysis, see all the research and data, but the future is unknown. So there's an element of it where you are going to make, some people say instinct, but that may sometimes be interpreted as like an emotional decision, meaning you may either overemphasize something that you really like about the company, or you may downplay a risk that you see about the company. So you may have a bias, right? A bias, I call it, where that bias, it can be confirmation bias, it can be recency bias. There are different biases that we can talk about, but so when you say remove your emotions, Worrell, I hope you're saying you've learned to keep your emotions under control, because I don't know if we can make an emotionless decision as it relates to investing, but certainly we want to have that managed, right? So Garfield said he bought it at IPO. Okay, cool. Know It All says stocks get called or just being there too long. I look at my portfolio, I'm like, you're just here doing nothing and doing nothing for an extended period. It's time for you to go. Okay. Actually, know what what that is too, but I don't do that either, because know it all, that's what I used to do. And then, because I just, rebalance, I'm like, I can't remember why I bought this stock. It's just there. Time to go. But I do something in between. I won't talk about that now though, because I want to keep on topic here, right? I don't have a stock that I wouldn't sell, but not selling Trans Jamaica for now. Okay. All right, we're getting somewhere. Humble Boss, tell me, why would you sell? What would be a reason that you would have to sell, right? Yes, I mean, I'm keeping it under control. Okay, cool, right? So I said I'd get into 3 reasons. The first one is, so 3 reasons why I would not sell a stock, right? Of course, the obvious one, you all know that I'm a dividend investor. So the first one is going to be the dividend yield is very attractive, right? I'm not just a dividend investor. I know some of you said that you're investing for dividends, and I wish I had my very first dividend check here to show you, because I used to get some really, 35 cents, 45 cents dividend checks, and those don't make sense, right? If you're getting those kind of checks, I don't know if you want to call yourself a dividend investor. And I saw somebody share something recently, saying that, again, dividend investors. So I say, okay, you have that stock in your portfolio for dividends. What's the yield on it? I don't know. So I said, what's the price you paid for it? And then we calculated the dividend yield, and then I found out it was like a 1.5% or 2%, somewhere around there. And then I was like, how does this make sense, right? So for me, the first one, the dividend yield makes sense, and the dividends are consistently coming. Now, this I'm saying in light of my recent video also about Dolphin Cove, right? I saw somebody mention it. Dolphin Cove is, I've lost faith in Dolphin Cove. I'll just say it here publicly. So Dolphin Cove is no longer on my watch list. It's no longer a stock that's in my portfolio. There are too many things that are uncertain and continuing, and that's not before the recent thing that I saw about the former CEO of the parent company and all of that mess. I won't post it here, but I'm sure it was shared in groups and that kind of thing. But their report finally came out, and that's the report I was waiting for, and what I was expecting is what I saw. And so I do think that as a company, they will see brighter days, certainly. They will at some point resume dividend payments again. They may very well even get back to a place that there's some stability with management or ownership. So by no means am I saying the company has no future or anything like that. But for me, it was in my portfolio for dividends. It is no longer serving that purpose. It's been 9 months and no dividend. And so it's, again, perfect example. That's the reason why I would move on, right? So no longer paying me dividends. So if a stock is paying me dividends, for example, well, I don't want to say, so I have a new stock in my portfolio that I'm not ready to say yet. But there's a stock that is going to be paying consistent dividends. And so that's a very good reason. That's the number one reason for me to keep a stock in my portfolio. That income is coming in consistently through dividends. And then, of course, I'm able to, at some point, get capital gains, reinvest my profits and so on, right? So that's the first reason. Kenton saying, what if you lost your check and you've gotten for dividend and lost it? How can, so that you can reach out to JCSD. You can post it in our community, Kenton. Post it in the new platform. I know the steps, right? Because we lost a couple of checks too. You're going to email JCSD, and they should be able to have the check redone for you. Okay. So that's how you take care of that, right? So that's the first one, right? If it's continually paying me dividends at a continually good yield, then it's staying, right? Because there is a portion of my investment strategy that focuses on income, and I'll tell you why, right? So with a family, with children, with expenses that are increasing, right? School fees, health costs, parental costs, other things to balance. It makes sense to have some income, right? Capital gains aren't guaranteed. Now, it's always good to invest a portion of your portfolio for the purposes of capital gains, and I certainly do that, but I don't go into it expecting it to go exactly as I planned. Meaning, I may look at an opportunity and say, I do believe that this could give me 50 to 100% return over some specified period, right? But I always offset that with dividends because I don't think that capital gains are guaranteed. I have been wrong before. I don't have any insight into the future. I just make a calculated decision and see where it goes, right? So if the dividends are coming, great. That's the number one reason for me to keep it. The second reason now is that, and I'll get into this one. This one is fairly short. This one is about, do I think that I just simply need to give it more time, right? Because there are certain things, and I can say this. One of the stocks in my portfolio last year was energy, right? Energy was there, formerly Siboney, and I had that company in my portfolio because I was expecting certain things to happen within a certain time, and I held on for as long as I could. But in November, December last year, I did a rebalance. And so I didn't see where in the short term, and short term for me is 3 to 6 months, that it would have gone to where I was expecting anymore, right? Especially with the prospects of, offers coming to market, some of which you've heard about before, and other things that I was expecting to happen. I was like, well, the price may actually stay still for a while. So I decided to rebalance, and so it's no longer in my portfolio. And then I believe shortly after I sold it, it went up to somewhere in the $20s range, right? Because I think I sold probably closer to $1, closer to 110. I don't remember, right? But it went up shortly after I sold. And so that's always something that's tricky for me, knowing when to wait. But usually I'm keeping it because I'm waiting for something to happen. So I'm waiting for a milestone. I'm waiting for some activity or something that's going to either help me to see some traction or some growth. That's the second reason, right? And this is always going to be subjective, meaning the decision to wait is personal because companies aren't always, accurate with their timelines, and companies aren't always transparent with their timelines, right? So one, they're not always accurate, meaning they may project something and then it does not happen, or they may just not be clear, or their MD&A could be vague, or they don't have an MD&A at all, things like that. So if I don't have that clarity, then I can't proceed, right? I have to invest based on what I know. So if I don't know, I'm not inclined to invest, right? So that's the second reason. So I'll recap the first, because this last one is gonna be where I'll stop and then take any questions that you may have. But we're talking about stocks, that reasons why I would never sell a stock, right? And this came out of a conversation I had with a client who said that you would never sell a certain stock for sentimental reasons. So I'm getting into the fact that there are challenges with that, and then I shared why I would hold on to a stock and what are some of the reasons I would stay until something happens, right? But the point I'm making here is that the whole keeping a stock for sentimental reasons is a little dangerous, because you kind of throw a good judgment out the window, And so the first reason I shared is that, of course, if the company is paying a healthy dividend and I'm able to get, a comfortable yield, because if I'm holding it in the first place, the yield would have had to be good. And so if the dividend keeps coming and the yield is good, then I'm certainly going to stay. And then the second one is, of course, if I'm waiting for something, if I'm waiting for a milestone, waiting for some activity. And the truth is, I've had stocks that have held on to for too long waiting on some activity, right? And sometimes, as I said, a company may project something to happen in Q2 or summer, right? I certainly remember being a Jam Tea shareholder for a long time, waiting on summer, right? And so I've learned to just I'll give a company a quarter or two after what they have projected or what I'm projecting, but I'm not waiting past that unless I have some clue that it's coming soon, because otherwise it doesn't make sense to just keep waiting, right? Opportunity cost is real. Opportunity cost is something that we have to manage well, and you can't hold for infinity, right? So hopefully that's clear. So the final reason that I'll state here is that I would say, and this is something that I have to kind of manage, right? What I would say is that the third reason is I think the market is wrong. Now, this one, as I said, is very tricky because there are some train of thoughts that the market is always right, meaning the price is the price. And so if it's trading at 50 cents, it's because the market is valuing it at 50 cents for whatever reason, right? So if you hold because you think the market is wrong, similar to like a contrarian investing model, which I'll talk about at some point. But there are stocks that I've held on to because I thought the market was wrong and that one day the market will see the light. A little risky in the sense that the market may never come around, right? The market may decide that they've moved on. There could be something that the company has done that the sentiment has been hit. It could be that it's just not interesting to investors anymore, or to even investors of all type, right? Whether institutional or retail. And so that's a third reason. It's something that you really have to have I guess I'd say nerves of steel because that one can be tricky, meaning that company now, if the market is undervaluing this company for whatever reason, you may have seasons or months or quarters or years where that stock price is depressed and may continue to trickle down. There's one such stock that's on my watch list right now. The market has not been valuing it correctly. It's down 40% from where it was when I first started to watch it. And I'm like, the market is wrong. The market is wrong. I don't have it in my portfolio now, but certainly I'm watching it and I'm sure the market is wrong. But I did think about, whether or not if I had that stock, could I really stomach a 40% loss? Because I started watching it and then it's down 40% since. So if I had purchased, I'd be down 40% now. Of course, I could do things like, bring down my average price and so on. But that would take a lot of conviction, a lot of patience, a lot of, kind of determination to still hold that, even though it's down, so much, right? So those are the three reasons. I do have a little bit of time. Let me know if you have any questions. I do have some reports I want to go through for a couple of minutes, and then we can just kind of close the video there. So let me know if you have any questions and I'll take them. I know it's been a while since I've done a live stream. I can't make any promises. Things have been, pretty hectic for me lately. But I'll say that there will be more more interesting things coming, is what I'll say, right? Okay, so let me see if there are any questions. Must see, this was not a video to reveal anything. That my stocks to watch. When I do those, I reveal my watch list openly. No secret to it. So my updated watch list will be shared end of June. So feel free to check that out. Feel free to watch any other stocks to watch that I've done. I share my actual watch list. It's not something that I make up. That is my watch list that I share. And so you can always see what I'm tracking. Spurtree, that's a stock you'll never sell. Sweetie Sweets. I'm seeing a lot of these names tonight. I'm not seeing any real names. Where people don't use their real names anymore. Destiny for Greatness. What are my thoughts on Eddie Focal? I don't know. I don't believe I've seen a report from them in a minute. Let me check. As I loaded the page, I see the Dolphin Cove's price has gone up. Happy for them, happy for shareholders to see that. I mean, oh wow, Eddie Focal is at 26 cents now. I think the last time I checked it, it was like 40 cents. Oil was at there recently. I don't know. I don't think they've released a report. They did something about audit committee, resolutions passed at AGM, unaudited quarterly report. Okay, so the last report was February 25th. I don't think did I go through the last report? I might have. I don't know. I think I'm waiting to kind of see how things shape up for them, Destiny for Greatness, because I don't think I have a clear picture as to what the company is focusing on right now. I believe that, okay, so I'm looking at their last report, right? Let me share my screen here. Because it appeared to me when I read their last report that they're in somewhat of a transition, right? That's kind of how I interpreted it. Because it says a year of significant challenges as we continue to navigate a difficult operating environment characterized by declines in revenue and profitability. Despite these setbacks, we remain executing our strategic plan, which is focused on restructuring operations, diversifying revenue streams, and building a more resilient business model for sustainable growth. These words, what they signal to me is a pivot. And so for me, I usually wait for clarity as to the business model before I have any thoughts, right? So this is a part of business. It happens. There's no issue with them having to do this. I think, I mean, being a business owner, we've pivoted, learn, grow, invest many times, right? So there's nothing wrong with that. So I can't really have thoughts on it, Destiny, until I know what the pivot will look like, where they will land, what they'll be focusing on, what the outlook is. So that's what I'd say. So, but I'm certainly rooting for them, is what I'd say. Let me see what the outlook says. So the outlook says, looking ahead, their primary focus will be on rejuvenating revenue streams, the expanded acquisitive platform. Yes, I did remember hearing about that, along with strategic partnerships and market expansion initiatives is expected to generate incremental revenue growth. They're also exploring the use of data analytics to better understanding user behavior and refine their offerings, maximizing customer lifetime value. I really like this, right? Focus on data analytics. I think it's an awesome play. The cost reductions and efficiency improvements are part of the long-term strategy to build a more resilient operational model, and they continue to monitor costs, right? So it didn't say, so apart from mentioning inquisitive here, they have not, I don't have the clarity here to again determine, so I guess we'll see the results as things progress. But again, I'm certainly rooting for them, right? So yeah, okay. So I doesn't seem like there are any questions for me. Okay, Sean has one. What if a stock has a good business model but fails to perform for some reason? Would you hold? I can't just make the decision based on a good business model. Is a good business, because a good business model may not lead to a certain amount of profits. And you can have a great business model and not make any money, right? Because of market conditions. So that is not enough, right? There are other things that I would look at. It can't be the sole reason, right? Is what I'm saying. Orville, I don't know if this is for me. Let me know. JFP, Jackie, you're still holding JFP? Is that what you're saying? I haven't looked at JFP in a minute. JFP. I haven't looked at JFP in a minute. Oh, 58 cents. I think they've been, within the last year, $1.31. Okay. But it's down 40% year to date. So I haven't looked at their report in a minute. So yeah. Seems like Jamaican stock market done with the bull with all these tariffs and what's going on around the world. Just investing in dividend stocks. I mean, in general, even before tariffs, dividend stocks were the play to make, right? That's what I've been doing for the last 2+ years. So dividend stocks have given me both cap gains and dividends. So that has been working flawlessly for me. But of course, that won't last forever. And so, yeah, is what I'll say for now with that one. Humble Boss, the market is kind of over saturated with offers right now. BOJ, GOJ, private bonds, Varita, and IPOs. I don't agree with that, Sean. I don't agree with that one at all. The market has capital. Capital is there. And when you see other offers come out and those other offers are oversubscribed, you will see what I'm talking about. What penny stocks on the JC would you consider undervalued? How do you describe a penny stock? Is a penny stock for you $1 or less? Let me know. How is it? Give me some context there, Orville. Not sure what you're talking about. Still holding from IPO. Okay, interesting. Yes, plus the very well. So remember, guys, people earn money every 30 days. That money needs to go somewhere, right? You have companies making significant capital. Some of the clients I work with have money sitting in savings accounts or sitting in places not being utilized. So there's capital to invest. There's more than, I think I saw where they said 4 to 5 billion were in savings accounts, or it was something like that at the start of the year. So money is there. Money is there. Money is there. Remember that it's not like the money that is there is static, right? It's moving around in the economy, and every what do you call it? Every 30 days, new cash is coming to those who have provided goods and services through their employment. Companies are generating revenue through selling products and services. So there's always more money. Even though TJH mopped up 9 billion, there's still money. There was 12 billion that went after that. That 3 billion have to go somewhere, right? Penny stock is anything under $1. The first stock on that dollar that I would say that I think is undervalued is Image Plus. That's the first one. Which other one? Image Plus. Yeah, Image Plus is the one I can think of right now. Oh, okay. Okay, no problem. All right, so Why do you think stocks are so stagnant? You make 5% one day, you lose 5% the next. The only stock making movement is Carreras, and even that is moving slow. But you're proving my point here, right? So you're saying Carreras is moving. Why is Carreras moving? It's only one reason, dividends, right? Nothing else. It wouldn't be where it is today without it being a very good dividend stock. Because they announced a higher dividend earlier this year, that's why the stock is where it is right now. And the only reason why Trans Jamaica is down from its 498 is because of the offer for sale. You have to give that some time for the market to adjust to its new level of liquidity. But dividend stocks are what's going to be moving consistently. Now, every other stock's momentum is going to be short-lived until certain things are starting to happen. But if you notice, Sean, companies are starting to do poorly again, right? It's a handful of companies you can say are actually profitable and increasing in profitability. So the stocks that aren't doing well, most of them are justified, right? Not all of them, but most of them are. So you have to bear that in mind, right? So I don't think there's anything wrong with it. I wouldn't say stocks are stagnant. Companies aren't performing, right? For whatever reason, right? And you have to think about the future outlook. You have to think about the fact that bonds and preference shares are more attractive to some investors, right? The persons with capital, the persons maybe who have the ability to move volumes on the market, they want a consistent return. If I'm a fund that has 10 million per month or 20 million per month to invest from pension funds, I'm not going to be buying anything else but a dividend stock right now. So that may be what's happening for some stocks like Trans Jamaica and the others that pay dividends, because pension funds, for example, may be a consistent source of funds coming into the market, whereas retail investors may not be investing as aggressively right now, right? But that is actually an opportunity, I think, right? Because stocks being 40%, 50%, 60% down is an opportunity. Some are undervalued, some aren't, some are fairly valued. So investors aren't investing in fundamental value, just dividends. Also, what's your definition of a performing stock? Our market has not invested for fundamentals in a long time, Sean. I don't know how long you've been investing, but our market doesn't invest solely based on fundamentals. A lot of stocks notoriously are down, even though the fundamentals are good. Our market has never done that for as long as I can remember. So I don't expect that to change. Even in the US, stocks don't always trade according to their fundamental value, and that's why they can be undervalued, right? That's what that would mean, right? Garfield, you don't have companies in Jamaica that pay monthly. You have some that pay quarterly, I believe. I think Sterling pays quarterly, I'm not sure. Most companies in Jamaica pay biannually or annually in terms of dividends, right? I would say Atlantic is a good penny stock if you have spare change, okay? Trans Jamaica soon start move again. Well, I'm not worried about Trans Jamaica's movement. Maybe we just need more people to start investing. You think so? A lot of new people started investing with Trans Jamaica recently. So I don't think we need more people to invest. We need because we do content to bring people in. Kalila does content. There are other persons in the space that do content to teach people how to invest, right? You have more persons doing content now, which I'm actually happy for. So the most persons that ever invested in the Jamaican market are investing right now. So I don't know if I'd say that is the solution, because we don't want more accounts of persons who are just gonna buy once and leave it, right? So we need an active market. That's what we need. But I would say the market is active now in pockets, right? I'm certainly investing more than I have been in maybe the last 2 years. And that's because I think that I did do a video at the start of the year saying that I think this is going to be a great year. And I still hold that. I'm waiting to see maybe end of summer to see, whether or not I still think the year is going to pan out the way that I think, because we've only seen one offer. I was expecting more, right? Especially with the increase in the junior market limit. But we'll see. Report looking good plus phase C1, 1C not still not collecting it. Guys, I can't talk about Trans Jamaica anymore. I'm tired of talking about Trans Jamaica. I've done the videos, I've done the thesis. You guys already know, right? I'm not worried about Trans Jamaica. I don't mind getting more at this price because 2026 dividends are one to watch, but they keep going on their current path. Okay. I'm not, guys. I'm going to be talking about other stocks. Trans Jamaica, I think, is very, unless there's new information, I don't think there's anything more that I need to say, right? But I do intend to go through that Trans Jamaica statement. I haven't gone through it yet, just looked at the highlights, and certainly it did not disappoint. I think RPL trades on fundamentals pretty well. RPL is doing pretty well. Absolutely impressed with RPL. RPL's Q1 is coming out soon, right? RPL is 350. Really, really great performance. I think it went to 391. Was 391 all-time high? I'm not sure. I wish the JSE showed you what the all-time high was. I wish there was something added here to tell you the all-time high, right? But anyway, in the last year, 399. So I think 399 is the all-time high, but only 5% year to date, right? But that is like really, I think RPL is gonna have a great year, and so yeah. So I think I'll look at RPL after their Q1, but remember that we did an interview with Andrew Williams. Well, I'm seeing 399 here, Sean. So 399 seems to be the all-time high. I don't think they actually went over to $4. I think 399 is the all-time high. But yeah, looks like you have to go rebuy. What are you talking about here in terms of my portfolio? Let me know. My portfolio is doing pretty well right now. Anything on 1GS? No, I don't think we've heard anything new. I am curious about their reports. No, I don't think we're gonna see any immediate impact from the DRT acquisition so quickly, because I don't remember if their report came out after the announcement. They did their annual report here. They announced the acquisition for DRT on February 18th. So I think their next report, so this is their audited financials. I don't know if this included the DRT acquisition, but I'm anticipating there may be some costs related to the acquisition or some integration or something. So I'm not expecting a great report for Q1 for them, but that's just me. I don't know what it will hold. So this is their report for the FY. I do remember when I saw this, I saw that drop in revenue, right? That's, I think, 33% decline in revenue. So I'm on the JC website. It's working fine for me, right? So this is what would be concerning for me. Do I think DRT can bridge that gap, 100 million? I'm not sure, because of because of the sale value or what they said the transaction value was for DRT. I don't know if DRT is going to generate 100 million for them, because if the payment is usually going to be based on some multiple of revenues or some multiple of profits. So I don't think DRT is going to do 100 million. Maybe it does, 50 million. I'm not sure. I don't know how they'll break that down, but we'll see. But this told me that they're gonna have some recovery to do. So this is why for me, I'm not sure where I would place them for this year, right? So that'd be it for me, because I'd look at the report here, because I would have expected that. No, let me leave that one alone for now, right? But we did see increase in legal and admin costs, and now you have to also appreciate, I don't remember how much is the team size for DRT, but the DRT team now is going to be on the payroll as well, right? So they may have increased revenue, but we'll really see what DRT adds to them based on what the numbers look like, what the profits will look like, what the admin costs will look like, because I think the DRT team is 20 persons, if I'm not mistaken. So it's just like he added 20 people to the payroll. But as I said, I'm not sure what the numbers for DRT look like in terms of revenues or profits. So we don't know what will be added. It appeared to me like that acquisition was more strategic, meaning long-term value and not necessarily immediate value. But I may be wrong. I don't know. I didn't get to do the interview I wanted to do with their CEO to ask some of the questions that I had. So I don't know about OneGS really, right? Hopefully that at least tells you where I am, right? Okay, Orville, get you. So the site is working for me. Next week is their Q1. They said they pay cash, no debts. They get all the profit from their team. Yeah, man, I remember that. So they paid cash for it. But again, what are you really expecting for DRT in terms of moving the needle for them in terms of profitability? I see where DRT makes sense to acquire based on the fact that they're an agency, the fact that they need a portfolio of services, the fact that they can increase the wallet share for the clients. All of those things are good. But you have to remember, with service-based businesses, this line item is going to be important. For service-based businesses, admin cost is always a challenge. So that is my line item to watch, because that's going to impact your profitability. So I would not be surprised if it is that, let me look at their Q1 last year. I would not be surprised if it is that, so for example, let me go through to this report. So what I will say is that I do think so when I look at quarterlies, I focus just on P&L, right? So there are 3 months for 2024 was lower than 2023. Now, I do think this will be 15 million difference. I do believe they should be able to bridge that gap. So you will see growth on the revenue. I certainly do expect that. That's the benefit of an acquisition. Revenues should certainly be higher. What I am watching for is this, right? What will this number look like, right? Because this was 20 million last year. So we'll have a feel, as I said, 20-person team. I believe their current team count was maybe 50 or 60. So they've added, I mean, not saying the persons are getting paid a third, but you're increasing your staff complement by 33%. So I am expecting this number to be high, right? Because I mean, not everybody will be on like a manager salary, but certainly, Danielle is gonna get her salary as manager. You have other maybe persons with different roles, etc. Some persons may be on contract, we don't know. But this number is gonna be, I think, let's say that they do 115, but this is 30 million. Operating profit is still going to be hampered based on that, right? So that's kind of my thought process. I don't know what the report will say, but my expectation is that we are going to see an increase in admin expenses at the very least, right? Because it is a specialized service that they're doing. Costs for team members are going to be high. So do I think they're going to be more profitable than they were last year? I expect them to be. But if they add 5 million, that's 50% increase on last year, right? So the narrative may be profits increase 50% for the quarter, but who knows? If they do something dramatic, like a 30 million profit, that's 200% growth. That would be excellent for them. So it really depends on top line. It depends on admin expenses. Those are the two things I'm watching to see what this number will look like. So I guess we'll know in a week, right? I don't think it matters what the performance target was. The numbers will show it. The numbers will show it, right? Just like with Mailpack and MyCard, they're not going to share that. That's private information. That's always going to be confidential. Companies aren't going to share what their targets are. They're never going to share that information, just based on what I've seen, right? Just know that the target is going to be based on either what they would have done and some increase or something to that extent, right? Hopefully that makes sense. Let me just do something here. Okay. Yeah, so hopefully that makes sense for you for 1GS. Any other questions? I have 8 minutes to go for this stream. Okay, I just saw something that made me laugh. Okay. So let me see if there's anybody with any questions in our community groups. Okay. All right. So I think I'll wrap up here if there are no questions. So I wanted to give an update on our upcoming class. Now we are going to have the Investing in US Markets Challenge coming up soon. Look out for that registration. We're likely going to have it next month. We are going to have Alexander Melville, CEO of Tropical Battery, in our community group next week. We're going to have that interview with him in our challenge community. And then, of course, how we're going to be doing it is the challenge community will be able to participate in the interview. And then later on, we'll post the interview probably to our YouTube channel. But if you want to be able to join the session live, ask questions, etc., you have to be a member of the challenge community for that one. And then, of course, we have our mid-month challenge call next weekend. That's going to be where we, go through. I don't remember what we're going to do this month. So I'll share that maybe another time. And then we have our usual end-of-month call. But last session that we had, I thought that was good. We did a portfolio example, right? So we went through a sample portfolio. And as a group, we kind of talked about, what we saw, what would be good to improve on based on that particular goal or outcome. So it was a great overall discussion. I thought it was a great exercise. Persons said they certainly enjoyed it. So the challenge is still there. You're more than welcome to join. It's $50 a month for the challenge, but of course we do have specials from time to time. If you pay for the entire year, you'll be able to get it 20% off. So there's still time to join. We do have a few spaces left in it. Of course, if you want to reach out for a one-on-one consultation, you can do that at any time. The link is in the description of this video. And we are going to put out a call to action as well for coaching pretty soon. And I think I shared with everybody already. I will find out very soon if I'm going to be able to finalize things in terms of becoming a financial advisor. So I'm excited about that. So if that goes well, of course, I'll make the announcement and we'll see what happens from there. But I'm looking forward to not having to do a disclaimer anymore in terms of saying this is not financial advice. But you notice I don't really do my content that way anyway anymore. So I haven't had to do as many disclaimers. So I'll do the disclaimers for like the stocks to watch, but I'm doing my content slightly differently now. So it's certainly going to be obvious that I'm not telling you which stocks that you should consider or buy or anything like that, so that there's no confusion about what I do. But those are things that you can look forward to seeing from us. So final call for questions. Hopefully everybody has been doing well. I'll go through the reports that come out for next week. I am looking forward to a few. I do think that there are some interesting ones that are coming. I do think some companies are gonna see some drops in price after next week. And so it's gonna be an interesting time. I think you'll have some great opportunities to do some shopping come next week. I'm waiting for Orville. I can't wait. Trust me, I can't wait because there are some services that I've been waiting to offer as a financial advisor that will, I think, be pretty cool to be able to help persons with some very specific things, right? Because when I look at a person's portfolio now, I can't tell them what to do. I can't say do this or do that. That's not my place right now. So there are a lot of opportunities I see to be able to have more impact with how I'm helping persons. I do see myself long term doing more coaching. That is something that I'm preparing to do more of. So even though I'll be having the role of financial advisor, I don't plan to just tell everybody what to buy, right? That's something that I still have to be, strategic about. But certainly, I'm looking forward to being able to state my opinion clearly on something. Like I can say, company A, I don't think is a buy for XYZ. I believe having the ability to say that explicitly, to have a clear opinion on certain things, will be refreshing. I think my audience will appreciate that as well. Because there are sometimes persons will ask me questions and I refrain from saying something explicitly because I don't want it to be seen that I'm having opinions that are swaying people one way or another. But as a licensed financial advisor, I'll be able to give my context in an unencumbered way, right? So looking forward to that and everything that it holds. So stay updated for that. All right. All right, guys. It was great being here again. I felt like it's been a while since I've done a live stream. Congrats to Kalila again. I have a copy of her workbook here, so I'm planning to check it out. Awesome stuff for Kalila. And to those I was able to meet, I met quite a few persons on the Wednesday, I think it was. So awesome to meet you all. And of course, if you're looking to join the challenge, you're more than welcome. We do have spaces there. And you can look forward to the mid-month call, which will be a stock review, and the end-of-month call, which will be our usual learning sessions, Q&A, etc. Then the interview with Alexander Melville next week. You can look out for that announcement in the community group. So let me share that link at the very least, so you can join the community group now if you're new. Let me just share that before I go. All right, so here's the community group link. So feel free to join. So this free community, you're more than welcome to join. And if if you're interested in the challenge, just go to the memberships tab and you can sign up there. All right, everyone, I'll see you again real soon. We have earnings reports to go through. We have some earnings calls coming up next week. So, let me share something before I go. I know I should be ending the stream, but I don't want you to miss this one, Investor Relations Curated. Since you are here, I do want to point you to our Investor Relations Curated channel, right? So this is a new YouTube channel that we created last year. So we had the Image Plus earnings call this week, I think 3 days ago. Renee, hosted it along with Keisha, and then of course we did this interview with Andrew Williams. This will be very, very informative as to how the year will go for them. And so watch these 2 videos, subscribe to the channel if you have not done so already. So yeah, that will help us for sure, because we're going to be doing the earnings calls over on that channel. We're not doing them on this channel anymore. We're doing them on the Investor Relations channel. So when you see the earnings call, you'll be able to get them all in one place and they won't get lost in general videos. And we're going to be shifting our CEO interviews to that channel as well. And this one will be for more tailored content, the tutorials, the classes, etc. The challenges, that's what we'll use this one for. Okay. So, all right, everyone, enjoy the rest of your day. Check out this next video. That is going to be interesting to watch as well. And I'll see you soon.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.